Today, we're diving deep into the world of SoFi and what's influencing its recent market performance. We'll discuss some key data points, the market sentiment, and everything else you need to stay informed. Hello, everyone.
Welcome to Daily Stock Update.
If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi has shown an uptick of 1.29% with just about 20 minutes left in today's trading session. It opened at a low of $8.13, following a quick sell-off, and peaked around $8.48 in pre-market trading, reflecting a wave of optimism among investors. The volatility is quite evident as traders speculate on the implications of a potential 50 basis point interest rate adjustment. This has sparked a lot of discussions. Is this a precursor to a recession, or will it bolster consumer buying power and benefit fintech companies, including SoFi? Recently released data on initial jobless claims was better than expected, with 219 claims compared to a forecast of 230,000. This positive news is crucial because Federal Reserve Chair Jerome Powell has voiced concerns about the labor market's strength. Overall, consumers appear to be holding up well, which could be beneficial for companies like SoFi. The current fear and greed index places us in the greed category, indicating an increased appetite for risk among investors. There's a 40.9% probability of a 50 basis point cut, which is seen as a bullish sign for the market. However, we could also see a more conservative 25 basis point adjustment. The upcoming Federal Reserve meeting is expected to be closely watched, as it may set the tone for market trends. Today, there's been little news specifically tied to SoFi, aside from a recent Form 4 filing indicating that several individuals exercise stock options. While these transactions are routine, they often generate speculation. My concern lies more with actual sales rather than tax-related transactions. Interestingly, there has been a trend of short positions returning. For context, 798,000 shares have been shorted, representing 18.76% of SoFi's free float, or about 196.42 million shares overall. The average cost to borrow shares stands at 0.57%, which is quite favorable for short sellers. In terms of performance, SoFi has shown resilience over the last 5 days, gaining 7.12%, and it's up around 15% over the past month. Even though there's been a slight pullback recently, the overall trend suggests positive momentum. Today's trading volume is notable, with 9.7 million shares exchanged, far above the average of 1.8 million. This activity reflects a bullish sentiment, with 49% of the options traded being call options. Investors are particularly optimistic about SoFi reaching the $9 mark, whether this week or next. The open interest indicates a robust interest at various strike prices: 53,000 contracts at $8, 14,000 at $7.50, and 19,000 at $7. This data suggests that traders are positioning themselves for potential movement around these price points. However, given the recent uptick in short positions, it's plausible that some may attempt to keep SoFi below $8 in the short term. There's been significant activity in the secondary market, particularly in the $100,000 transaction range. The morning saw considerable buying from institutional investors, but this momentum seems to have leveled off. Algorithmic trading has contributed significantly to volume, creating some irregular patterns that could misrepresent true market dynamics. If larger entities stop buying, we might see a sudden drop in volume, leading to instability. Dark pool trading appears unusually quiet, which often correlates with short selling activities. Although shorts are returning, the focus seems to be on smaller transactions rather than larger movements. This might indicate a cautious approach among investors. Currently, SoFi is trading around $8.20, just below a key resistance level of $8.31. It's crucial to monitor whether it can break through this barrier. On the downside, there's psychological support near $8, which could act as a significant level for traders. Interestingly, we're noticing a shift as some retail investors exit their positions. If you're one of them, I'd love to hear your thoughts. Are you concerned about a potential recession linked to the 50 basis point discussions? Or did you simply want to lock in profits? There's nothing wrong with taking profits, especially in a volatile market. As a trader, I focus on technicals rather than emotional attachments to stocks. In the past, I've shared my trading decisions openly, including my approach to selling and re-entering SoFi at different price points. This transparency is key for navigating the ups and downs of the market. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.